The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
Well, good morning. Just as I'm getting ready to go on the air here, just noticing we're seeing that the major indexes here in the U.S. are off their earlier lows. So we've got the market miracle, as I like to jokingly call it, happening a little bit early in the day. That could be dangerous. Yeah, I'm being facetious here. Just because a lot of times, as we know, we see these intraday market gyrations that are happening, and sometimes it takes till later in the session before you have any significant or any rally that really takes hold there to make some of the bulls happy. As you know, if you listen to this show, I'm pretty much more or less direction agnostic. In fact, I did enter into a trade this morning in our Low Price Leaders newsletter for subscribers of those to take advantage of some of the downside that we're seeing here. And we'll see how that goes. We did. The exciting news, really, though, for subscribers of the newsletter, we booked a 20% gain this morning in one of the holdings. So that's something that you're not necessarily seeing a whole lot of that these days, so I think people who were able to participate in that particular housing-related trade, pretty happy right now with how that one worked out. I may get back into it. What I didn't like, though, was that a lot of the stocks we're seeing right now are pulling back below that 5-day exponential moving average. And while that's not necessarily devastating, a lot of these names that are on my watch list could go ahead and find support at that 15-day, 1-5, that shorter-term exponential moving average. And that would be fine. That would be, in many of these cases, could be a good place to re-enter a stock, assuming you'd want to see the market go back into some kind of uptrend. But as we all know, the trending has been very, very difficult lately. You're seeing trends to the upside or the downside of only a few days in either direction, maybe 3 days or so, 4 days. I know you've got the NASDAQ showing, its 5th day in a row right now. But nonetheless, when it comes to some of the stocks in particular, and even the averages, it's hard to get on board any type of longer-term trend these days. And it might be that way for a while. Wouldn't be surprised if we did see that just for quite some time. We all know there's so much uncertainty that's happening out there. You've got Europe. One of the things that's happening this morning in the news that was kind of interesting, you've got, for a long, long time now, many people had been looking to China, as well as some of the other emerging markets, as being the leader and really the place we could all look as perhaps showing some strength amid the global market downturn. Now, this morning, there was some news from the luxury goods sector in China. A big jeweler, Chow Tai Fook, that's F-O-O-K, and it's bigger than Tiffany. The stock trades in Hong Kong, and we're seeing that one has shown some declines over there in Hong Kong trade based on some disappointing sales figures. You've also got Prada trading lower. Now, just you can find Prada boots and shoes at DSW. Maybe the ladies who are listening today might be more interested in this, but you can find Prada boots and shoes at DSW at some very good prices. Just saying. A friend of mine got some great Prada boots for $200 at DSW. Terrific discount there. And they also have Prada sunglasses discounted at Sunglass Hut. I noticed that when I was in there a few weeks ago. But nonetheless, overall, what we're talking about here as a luxury goods maker, we're seeing some of these suffer. And it's not only the luxury goods. Obviously, we had that disappointing news from Cummins, CMI, the other day. And why don't I, just for fun, I usually start out the show with a chart of the IWM. And let's just glance at this before I move over to CMI. But you notice how this is a daily chart. You see this, a lot of declines here in the IWM, not acting well at all, but still above that 50-day line. So that's not bad. Again, for the bulls, might be interesting to see what happens there if it does get some support at that 50-day. Now, I want to just show you Cummins engine, which had talked about weakness in some of the traditional BRICS, China and Brazil. I believe this announcement came out Tuesday. It moved the market late in the day after I had done my show, and that really sent the market into a steeper reversal on Tuesday. But you see the action here in Cummins engine and how that stock just continues to decline. So right now, not necessarily that there's any one thing. I'm always careful about that, attributing any of the market action to any one particular worry or jubilation about anything, although you can often see when there's expectation of further quantitative easing that the market does become exuberant, and you do see some buying on that. But today we are seeing the sell-off accompanied by concerns about global economic weakness. So that is something here just to be cautious about. Let me put up a chart right here, obviously, if you're going to take advantage of some of the downside. Now look at what we've got here in the RWM, which is the inverse ETF of the IWM, the Russell 2000. So if you want to be taking some advantage of what's going on here, this one is trading above its 5-day moving average right now, so showing some pretty good indications. But as I said a few minutes ago, it's been tough to follow along with any trend for any significant period of time lately. That's just been difficult. So if you are able to get in and out of some of these ETFs in particular, are a terrific way to take advantage of the trend. That could be something. And of course, we talk about that a lot in the Low Price Leaders newsletter. Let me tell you about that a little bit if you're not familiar with it. I am the editor of the Low Price Leaders newsletter here at TFNN. In addition to doing this show, as the name suggests, we focus on lower price names. Stocks trading between $5 and $12, not penny stocks. We want to be catching them in that $5 to $12 range when they could be at a good springboard to rally higher. And it has been tough lately, but there are still stocks in that area that are showing potential. We also cover, as the name of this show suggests, we also cover small caps with a market cap below $2 billion. So between 300 million and 2 billion. I also want to see some liquidity. I know there's a lot of good charts, and we're going to look at some charts today. There are some potentially strong charts of stocks that are very, very thinly traded. Most of the time, I tend to shy away from those. I'm really not so much a fan of some of these stocks that have very low liquidity. It just makes it very difficult to really be holding some of these, and we'll show you a couple examples of these in today's show, maybe after the next break here. Now, the latest edition of Low Price Leaders newsletter went out yesterday. A number of names fell off the watch list, and that should tell you something. I'm talking about the watch list, not the list of holdings. As of right now, there is one trade on. It just went on this morning, and it is taking advantage of the downside in the market. So that's what we're looking at right now. And we did take profits in the housing-related name, as I mentioned, of over 20%. We are trend following here. really watching key moving averages, the shorter-term moving averages, not so much sort of traditional chart patterns at this time. I know many of you are aware that's my background is coming from an analysis of many of the chart patterns. Sadly, those aren't really working as well right now in every case. They are in some cases. You have some stocks that typically when they rally to new highs, they keep going. But then you have others that you really need to catch before they rally to a new high, and that's where some of this shorter-term moving average action can indicate to you when is a good time to buy, to sell, to take profits, to cut your losses. And risk management is a key component of what we do there in the Low Price Leaders newsletter. So a number of names fell off the watch list, and that should tell you something. When stocks that have been showing some technical potential begin to break down below some of these key moving averages, it's just one more confirmation of how poorly the general market is acting. Now, right now, tech is not looking so good. What I like to do on the show sometimes is isolate a little bit of a sector or two. We've talked about some of the housing stocks, some of those housing-related plays. We've talked about financials. I wanted to talk a little bit about tech today. And let me just put up right here one of the stocks that I had been actively tracking for quite some time. Many of you may know this one. This is Cirrus Logic. CRUS is the ticker on this one. This is an Apple supplier. They supply audio chips. Now, this one actually, for a time, had been outperforming Apple. But as of now, it's dropped below. It actually, if you take a look at the daily chart here, you see this too made a big move down along with the market on Tuesday. And then you see it's just continued to trade below that 50-day line. Its shorter-term moving averages are heading lower. Right now, frankly, this is a technical disaster at this point in time. It's fallen off my active watch list, not actively tracking this one at the moment. So this is Cirrus Logic. Just not going to be tracking this one too much right now. Okay, this is good. We've got a call. I've got actually less than a minute. If our caller can hold on until after the next break, and we'll take him after the next commercial break if he is able to hang on and he wants to talk about some of these auto parts stocks. And yeah, that's been an interesting little area as well that has been in the news. Let me just, before we do that, though, before we go to break, let me talk a little bit here. Actually, you know what? We'll pull up some more techs after the break, and we'll talk about some of these auto part stocks after the break as well. I'm Kate Stalter. You are listening to the Small Cap Roundup. You, too, can give us a call here, 877-927-6648. We'll be right back in just a few minutes.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pezzavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. Just like that, another month has passed, and the Great Panther Silver Summer Silver Giveaway has come to an end. Each market day in June, one lucky winner was chosen to receive a 1-ounce silver bar, courtesy of Great Panther Silver and TFNN. We'd like to thank all the listeners that chose to participate, and if you weren't lucky enough to be a winner this time around, be on the lookout in the coming months for another opportunity to win a 1-ounce silver bar, courtesy of Great Panther Silver and TFNN. Thanks so much, and good trading.
This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
All right, welcome back. This is the Small Cap Roundup. Warming up here for the European close, which happens in a few minutes, and we'll see if the U.S. indexes get any kind of bounce or decline based on what happens there, as you sometimes see. So I've put up a chart in front of you of O'Reilly Automotive, if you're watching on Tiger TV, ORLY. Now, this is not a small cap, but we have a caller who's inquiring about this, and this is one of our callers we've spoken with before, Garo in Orange County. Hi, Garo. How are you today?
Very well. Thank you, Kate. How are you?
Doing well. Just checking out what's happening in the market here, following the trends. So O'Reilly, this is an interesting one. So this one, as many of you know, but I'll give you a recap. If you see there on the daily chart I put up in front of you, it had a huge crash in late June because it lowered its second quarter outlook. Now, a lot of times these outlook declines where a company does reduce its sales outlook, there's an initial crash, but then you do see the buyers coming back in. Now, I'm noticing that the analysts have lowered their expectations, but still expect double-digit earnings growth this year and in 2013. So, Garo, sometimes these things are not quite as dire as might be reflected in the stock. And And then on top of this, so you see there on the chart, it's been trending higher since then. Obviously, a lot of bargain shoppers seeing some potential here coming into this. It's still well below its 50-day line, but it's above its 5-day exponential moving average. I'll talk a little bit about some of the technicals in a moment here. But we did have, you're seeing a nice rise in this one today. And what happened was Citigroup actually boosted its outlook for AutoZone. So, just a lot of conflicting data out there, but what else is new these days? That's what we tend to see. So, Garo, are you in this one right now, or are you thinking about it?
Yes, I am in it. I bought it when I 5-day SMA crossed the 200 SMA, which was $86.50.
Great.
I bought it, and I'm here. My exit is $90.16, which the linear regression line crosses there. Yep. I needed your opinion regarding when to get out. Do you agree? Do you use that linear regression line?
No, I tend to use the 5-day exponential moving average, and I know that everybody has their different technical indicators that they do use. And Garo, if that's one that's been successful for you, if you've been able to take profits using that methodology, then I would say continue using it. I mean, I like what I'm seeing here. I like that the fact that this one is right now above that 5-day line. Now, one interesting thing I'm seeing here is the 15-day is actually still above the 5-day. So you might have some more, and the 15-day, let's see here, you might have some more room to run on this one if the shorter term moving average does cross above the other one. In other words, if the 5-day crosses above the 15, you might have some more room to run on this one. So that would be my only question. But look, if you have a methodology that you're using, I like that it looks like you have a chance to get some significant gains out of this one. And you did have some good technical indicators that you used, not just kind of winging it by saying, oh, look, it's at a bargain right now. Sounds like you're doing well in this one. I like this one as a short-term trade. I mean, obviously, it's got a whole lot of overhead to make up before it regains those prior highs. And, that's kind of what I was saying, if you were listening a few minutes ago, that I'm noticing that a lot of stocks lately, if you wait for them to hit previous highs, you've waited too long, because that is the topping action. So it sounds like you've made a good trade in here. This is I like what you're in here right now.
I'm sorry, ma'am?
Yeah. I like how you're handling this particular trade right now. This is good. Yeah.
My entry and exit is on that linear regression line. Here it tells me that to get out at $90.16, which I bought it at $86.50, and the same way on CMI. I shorted that at when it crossed that linear regression line, which was $90.61. I shorted that at $90.61, and I got out that today. Today it told me that to get out, and from here on, it's going to go up. That CMI is going to go up from here. But that is my
at some point
thing.
It will. All right, Garo, thank you for calling. Great. All right, great to talk to you again. All right, everybody, so you, too, can call in. We'll talk about stocks, 877-927-6648. We'll be right back with the Small Cap Roundup.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, welcome back to the European close segment of the Small Cap Roundup. All right, we do have, as I just indicated, European indexes closed. We have the U.S. trade, okay, a little bit above earlier lows, but I think what this seems to indicate is that no one is going into any kind of rejoicing, expecting further quantitative easing. In fact, the Fed minutes that were released the other day pretty much put the kibosh on some of that excitement that's always... Markets always seem ready to become exuberant at the prospect of more QE here in the U.S. and elsewhere, but not really seeing too much excitement over that right now. So let me go back to some of the smaller cap names that I've been looking at. And one of the things, really the theme of the day, is that many of these names that had been performing well are now showing some weakness. So this is Synacor, and this is one that I've talked about quite a bit. It has been, I believe, we may have had a caller a while ago who asked about this. It's also something that has come up on some of my screens. Now, as you can see, let me put this on a weekly chart, and that's going to give you a little better indication of some of the volatility that you've seen in this particular stock. So there you can see how it's looking there on a weekly, and I'm going to put it back onto a daily right now. So you see this big decline here on Tuesday, and of course that was the day that the market also reversed lower. Now what happened here on Synacor, it was downgraded by an analyst at Citigroup. It was pretty lofty already. You can see that it rallied to a new high earlier in that session. And since most stocks track the market direction, it may have been due for some kind of pullback in any case. Now this one has a market cap of about 456 million, moves about 1.2 million shares a day. So some good liquidity, and of course being a tech IPO, and this went public at $5 back in February of this year, so it's very new. So being a tech IPO tends to get a good deal of attention, and that's partly because tech is historically a good growth sector, and investors tend to flock to that. And as you've seen, let me put this back here on a weekly, and you can get a little better of idea of how it's been trending. It has been trending higher, so in fact, that idea that investors flock to tech, that has worked in this particular case. Now, this company makes a platform for cable providers and telecoms to aggregate their content. So you can see that there's an interesting and viable business model there. But it doesn't really matter. Let me see. So far, I mean, just in terms of how it's trading right now, it's down about 4.9% this week. We're seeing heavier weekly volume than last week. And there was some company-specific news, of course, in terms of that Citigroup downgrade. But don't forget, a lot of these investment banks and brokerage downgrades, they're based on valuation. These guys do use price targets. So you often see that when a stock gets a bit frothy, they're going to be selling off, not necessarily something that an individual investor would use as a marker for selling. However, frequently, if we're in one of these stocks and one of these investment banks does deem the valuation to be too high, they will get out. So that's often a time that we find ourselves having to take some profits. I was not in this one in particular, just speaking generally. You know, it's kind of interesting that Citi even bothers to cover a small cap like this. I think that because it was a tech, they were going to get in there, and it is so soon after the IPO. But frequently with some of these smaller names, you see that there's not too much business for the big investment banks and brokerages to be doing after the IPO. So part of it is after they issue a sell downgrade, they can really quit paying much attention to it going forward. So that's something we have there on Synacor. That's one that really just jumped out at me because it has been a pretty good performer, but you do see quite a bit of volatility there. Let me turn to another one here. I'll put this one up on a chart. I've talked about this one before. RTLX is the ticker. Retailix, I'm not sure exactly how you would pronounce that, but it's RETALIX. RTLX is the ticker. Now, this is an Israeli tech company. They make software that allows convenience stores, gas stations, other small retailers to track their sales, including gasoline sales. You know, it's interesting because there are so many Israeli tech companies, and there are a few reasons for that. You've got a well-educated entrepreneurial population with a strong work ethic. Maybe even more important than that, though, literally developing cutting-edge technologies. Israel's survival depends on that. Economic survival as well as literal survival. I mean, you might look at something like retail tracking software. Well, no, that's not in the defense sector, but a lot of various technologies have emerged out of the need to develop security technology. I mean, you could see how that works in this country as well, as you might have a guy who worked at a security technology company, and then he leaves and starts his own with something like this retail sales tracking software. So a lot of tech applications have developed here. Now, one thing about RetailX, this is very, very thin. Only moves 4,100 shares a day on average. It's got a market cap of $510 million. So the market cap is not really what concerns me so much here. It's really that thin trade. You don't see a whole lot of U.S.-based mutual funds and hedge funds with significant positions in this particular stock. They really can't. There's not enough that's out there available for them to be buying. So that's something not particularly a fan of those, and generally speaking, most of the time, those are not the kind of stocks that are going to show up in the Low Price Leaders newsletter. There are some exceptions. I will occasionally make some exceptions. There's one I talk about a lot. I won't pull it up today, but that has had a very strong run-up in the first quarter of the year, indicating that there is quite a bit of good institutional confidence there. RetailX has done okay. I'm going to kind of move on now, not really liking that thin trade in there so much. Let me show you another Israeli company. I've actually got a few of them, and I wasn't designing this as any particular Israeli-based discussion today. It just kind of happened that a few of these popped up on my screens. And by the way, I visited Israel many years ago now, in 2000, kind of right before there was some renewed violence, unfortunately. Beautiful country. I really, really, really enjoyed it, just on many, many levels. So it was a terrific trip. And that's just a little side note there, apropos of nothing to the charts that we're looking at here, just that I enjoyed visiting there very much. Now, this is Allot Communications, ALLT. Now, you're seeing the big decline in this one as well. This also fell off the watch list. Basically, what had been happening here, let me put this up here in a daily chart, and you can see how this one is trading relative to its 50-day line. So you see, for a while there, it began falling. I mean, this thing has just been in a free fall. There's no choice when you see technical action like this that it's got to come off an active watch list. Now, if you have a bit of a longer-term perspective, you might want to see if it's going to be finding support there at the 200-day line. But see, the way that I run my screens, I don't really need to be watching for that necessarily. I want to see some shorter-term support, and it'll pop back onto my screens when it does get that. Now, this company provides network content optimization. There's a lot of those around, and obviously with the increased usage of particularly video over the web and just a whole lot of content, dynamic content going out online, that's a business that is growing. In fact, now this is a good reminder here, the fundamentals, and I know most folks in our audience are the traders, but for many of us who do watch the earnings estimates and do watch the fundamentals, this is just an interesting little point here. Analysts are seeing earnings growth of 25% or higher this year and next year. So it's not always the case that you'll see a big decline based upon some kind of significantly reduced expectation when it comes to the earnings growth. So we've also seen some double-digit revenue growth. We've seen, let me see here, just kind of looking at some of my data here. Okay, we've seen earnings slowing a little bit. You've had some triple-digit growth in the past couple years. That's really unsustainable on a longer-term basis for any company to grow earnings at triple-digit rates for the indefinite future. But nonetheless, so fundamentally this looks fine. There are no big concerns about this one here. And you are seeing, let me see here, market cap of $688 million. So this does fall squarely into the small cap bailiwick that we track in the newsletter. Not bad liquidity, 537,000 shares a day on average. But as I was saying near the top of the show today, when you see a lot of these names that have been performing pretty well, when they suddenly begin to break down, that's not a good indication here. Let me show you this. So you see on a weekly chart how a lot had been trending higher there significantly for a while and then did break down here. So, in many of these cases, I know that it's often, and I do this too, I talk about what's going on, but sometimes it's not even necessarily that there's any particular news here. In fact, I'm just going back here. Okay, so the company reports its second quarter on July 31st. So that can often be some kind of catalyst for a big price move in either direction or another. And I'm just kind of looking at some of the news here today. We do have the Tel Aviv index just in general trending lower, but of course you could make an argument that that's just part of the worldwide decline in stocks right now. So we do have Tel Aviv stocks trading lower, but of course all of these here, this one, Allot Communications, is a U.S. listed stock, of course, but just kind of tossing out some background information that we have going on there. Let me show you. I have another Israel-based name, and as I said, that really was not the intention at all today. Just happened to run a scan of some of these tech names that maybe in the past have shown some potential or have some good indicators, but as of today are trending lower. Now, this is Radware, and this is not really too bad compared to some of the other ones we've looked at. This has a market cap of $745 million. Again, it's that thin trade, and this is why I'm kind of looking at this consolidation here, and it is tracking in a manner that if it were more liquid, it may well be showing up on some of my scans for the Low Price Leaders newsletter, but it's not because it only moves 178,000 shares a day on average. A little bit on the thin side. Now, I do like, having said that, I like this prior run-up here, so this could be one that I might evaluate as some kind of special situation going forward. But let's just take a look at what we have on this one right now. It's down about 4.3% for the week right now, so it really doesn't look that severe on the chart, but it is about 4.3% for the week. So far appears to be some lighter weekly volume. Does that matter? Not in this case, not particularly. Nonetheless, though, we're still appearing to be within some kind of trading range. Let me just see. The prior low in this consolidation was 35.78. Yeah, we broke that low. So we broke the low of the trading range that it's been in. Not a good sign. So this is just another one of these examples of one of these stocks that had been holding up nicely, breaking support. Not a good thing to see right now. Okay, let me move on. I've got a little bit of time left in this segment, and there's another tech that we've talked about. Today's theme, not Israeli stocks, but techs breaking down or not showing the kind of potential they had been. This is TNGO, is the ticker, Tango. I've talked about this one quite a bit here on the show. It's actually one that I was in previously. This is a tough one to hold, though. It shows some very erratic trade. Right now, it actually sliced some key moving averages. So there's Tom Petty. I'm going to come back for the final segment. We'll talk a little bit about Tango and a little bit about some of these other small cap techs, how they're looking. I'm Kate Stalter. Be right back after these messages.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman-Wave methodology for several years now. His Chapman-Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back. Final segment of today's Small Cap Roundup. Now, I left the chart up there for a company called Tango. The ticker is TNGO. Now, this stock went public at $10 a share not too long ago. Let's see. That was back in about a year ago, in July of 2011. So, actually, you can kind of see back here on Tiger TV on the far left side of the chart there, it did the very typical post-IPO decline. And then as it cleared that little consolidation or on the way up, could have offered a buy opportunity. But this has been a very difficult stock for trend traders to hold. Now, this one has a market cap of $737 million. not bad liquidity, about 538,000 shares a day. And this is one, I was actually in it at one point way back here a few months ago. I don't have my trade records right in front of me, but it was a while ago. I know I got shaken out of it when it pulled below the 5-day. Very difficult. You can just see on this one, it is pretty erratic. Let me see. Beta of 1.1. So, okay, that tells you something. So right now, let me put this up here on a daily chart for you to see. It had been holding up pretty nicely, made a nice bounce above that 50-day line, and was continuing to attempt to hold some of those gains. I mean, you could see here, if you're looking at a daily chart that I have up here, you can just see how difficult this stock really is. And hopefully someday the trade character will settle down a bit. That sometimes happens. You do see that happen quite a bit, where sometimes the character of trading does settle down from something that's pretty erratic, showing some wild swings, into something that is easier to hold, at least for traders. I'm sure for some of the fund managers, they're able to stay in some of these, to sit through some of these price swings that for an individual it's just a little bit riskier. So right now, the stock is trading below its 50-day line, and in fact, let me see here. It's actually, it's below its shorter-term moving averages as well. I mean, this could end up being some kind of constructive sell-off here, but it's way too soon to say. All right, I had a couple more here. I've got about a couple minutes left here in the show today. Let me show you one that I've been tracking for a while. The ticker here that I'm going to put up is PROJ. The company is Deltek. Now, this is customer relationship management, logistics type of software. It's I don't know, you might say it's sort of along the lines of Salesforce.com or one of these type of database companies. However, they specialize in engineering companies at their particular client base. So this has market cap of $827 million. And again, this is one of these, I look at this stock, I like this one. I've kind of shied away from it so far because I really don't like the thin trade, but as you see, it's trended higher while I've been shying away from that thin trade. Let me see here. It rallied to a new high yesterday, as a matter of fact. Its session high was 1246. It's been pulling back. It's right now little bit, as of this moment, little bit below that 5-day exponential moving average, nicely above the 15-day line. So holding up pretty well. You know, this one, I do kind of like the potential on this one, especially for investors who are, or traders who are not too risk averse when it comes to some of these more speculative, thinly traded names. And it's one that I believe I've talked about a couple times before on the show. So who knows? Could it offer an opportunity coming up? It might. All right, that's a wrap for today. I will be the guest later on today at the 5 o'clock hour. I'm Kate Stalter. Check out the Low Price Leaders newsletter on the homepage of TFNN.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry